Good morning. Welcome to the Stock Planner channel. Today I would like to talk about Uber Technologies and sell a poor man's covered call against it. But before we do, we look at the strategic view of the market. This morning or yesterday, the Dow was slightly up. The Nasdaq took a big hit, and the S&P 500 was a little lower. Looking at the map, my wife is a relatively new trader, and she bought actual stock for Nvidia, Microsoft, Amazon, and Tesla. Tesla is their biggest holding. And we can see that Tesla is down by 2%, Nvidia 5%, Amazon 1.5% approximately. Microsoft, she has 2 shares, is up a little bit. The techs did do well yesterday. There might be an opportunity for Uber. Looking in FinViz, and we see that Uber has been in a downturn for the last few months, since October. It is a profitable company. You can sell options on it. A lot of people trade it, and the target price is 105. Currently trading at 74, 105. Remember, that's 1 year. It's back to where it was trading range in October, and I think there's a good chance of getting back there. So if we do believe that Uber is going up over the next year, there might be an opportunity to sell a long-term, 1 year out, poor man's covered call. I'm probably not going to recommend to my wife to sell it that far out because she only has about $2,200 in her account. She'll have more as she gets more confident. She has it saved in her savings account, getting little interest. So she's starting getting into this. But right now, she doesn't have a lot of money to work with. Let's dive deeper into Uber Technologies. You know, Uber is more than just a ride-hailing company. They have diversified well beyond that. Uber Eats, I don't know why anybody would pay all that money to get cold food delivered, but I live in the country, a suburban area, and people are doing it in droves. And for Uber Eats now represents a substantial amount of their revenue. Young people are keeping the delivery trends strong, even as money gets tighter. People are, I don't know where they're getting the money, but people are still ordering the delivery food. They've established a way of obtaining memberships and subscriptions, keeping customers in the loop, and it builds customer loyalty. It's a good move on their part. That concept they're calling Uber One. And their advertising revenue has increased by diversifying in several different revenue streams, has helped stabilize the growth, this company's growth, even as ride-hailing growth slows down. I also like Lyft. And they're looking into autonomous platforms and autonomous vehicles, robo-taxis. They launched a application called Uber Autonomous Solutions, and they've established partnerships with other autonomous leaders like Wayne, WeRide, and others. They hope to have autonomous rides in 15 major cities by the end of 2026. Wow. Looks like some Uber drivers are going to lose their jobs. The autonomous market is expected to be a $1 trillion ride-sharing market. You know, this company was bleeding money over the last couple of years, and now they're profitable. FinViz has an article from Insider Monkey, and they're claiming that Uber is one of the best transportation stocks to buy. They're even repurposing their stocks. By the way, this article states that fully autonomous vehicles are expected and anticipated in the coming months. The Street recently has another article, and they're saying Uber made a deal with Joby. Well, what is Joby? It's a air taxi, vertical takeoff type situations, for passenger vehicles, probably autonomous as well. And that was just a couple days ago. Let's look at the stock in the trading view chart. That Joby article was on the 25th or the 26th, and that's where the stock market and Uber technology jumped. But how I found Uber is I have a watch list, and you should have a watch list as well, of stocks that you regularly trade And I used a lot of times on this stock here because it's relatively cheap. I sell a put against it. That's my favorite strategy. But again, like I'm saying, my wife does not have a whole lot of money, and so she needs to think about a covered call. But she don't have a lot of money, so she needs to think about a poor man's covered call or a poor woman's covered call. But I have a screener. It's when the RSI is below the 40, and now it's about 49 after the jump. But this is a weekly below the 40, and you can see that it is, and it takes a lot of less noise out of it. So ideally, a swing trader, as I am, I could consider selling Uber there when the RSI is above or around the 70, and again here when the RSI hits below the 30. There's a good times, less noise with the weekly chart. And I threw this in here where the analysts think it's going to grow by more than 10%. Switching to the daily or drilling down, you got the same look. And now our MACD is showing a long. And back here, we've seen that on a daily chart, the RSI has dropped below the 30. And that's a good time to look for reversals. This yellow line is the 200-day moving average. And if you're a mean reversion type trader, you would think that this stock will revert to the mean. So it's going to go to around 87, let's just say 80, around the 80 time frame. According to TradingView, they have this as a strong buy. And they're saying it's going to go to 105, which is about 40% increase. I just think it's going to at least go up to the 80 price range over the next year. There's 48 analysts covering this, so it's a very popular stock. The average is 105. Some say it'll go 150, and very few analysts think it's going to go below 70. That's a good sign. And by the way, this is TradingView. Most of it's free, and you can do a lot of this. They give you 2 or 3 indicators for free. You don't need a lot, and you can do some scans. Most of the You have the ability to do most of it. This is another tool I use, Simply Wall Street, and I like it because it does some of the analysis for me and allows me to do other things. I have a business that I run, and that takes some time. That's why I'm a swing trader instead of a day trader. I can't afford to sit in front of the computer all day. This is called a snowflake. It does some of the analysis real quick. This company is very healthy, had a strong financial past, even though it was losing money. The future looks pretty bright. It's got some headwinds against it. And according to Simply Wall Street, it's probably undervalued. And they're saying it's trading at 56% below the value. So a lot of times you look for a big green snowflake, and it can tell you a lot of things that you know right away, well, just by looking at the picture. Earnings are forecast to grow only by 7%. That's not a lot, but it's more than the year past. Let's look at the valuation. Current price is 74, but if you use the discounted cash flow model, this stock should be really trading at $171. So if you believe the stock is going up, which I do, this bodes well for that stock. Now here's how it's doing amongst its peers. And by the way, a lot of people are selling poor man's covered calls against Grab. I put it on my watch list. I've never sold any yet, but I recently put Grab Holdings on my watch list. It's a relatively cheap stock. Anyway, you got Union Pacific, CSX, and here is Uber. And way down here is Lyft. Very cheap, Lyft is. Trading around $16. I like to sell puts against Lyft, and I'm lucky I didn't have it there. And this, by the way, is I want to just tell you, this is paper trading right here, which I do sometimes to test out my theories. And the nice thing about paper trading, when your stock does sell, you get a little notice with TradingView. And that way, if you don't have a lot of alerts set, which I don't set a lot of alerts, I get alert when it hits that level. And that's where I think it's going to go, to around 1884 for Lyft. But back to real life and Uber and real money, my wife's real money. Looking at an option visualization tool, it's free again too, called Option Strat. Typing in Uber and selecting a diagonal call spread, which is essentially a poor man's covered call. and it's a long type situation. It's a long term or long strategy, and it requires you to go ahead and purchase a call at 65, but you're out to September, and we didn't go out for a year, even though some of our target prices are 1 year out. You can, but I want my wife to do this twice a year, and I want her to be out in just a few months in June. So you sell a call, in this case an 80 call, in June. So if the stock, as I said, that's where I think it's going to go up. If the stock is trading below the 80, you get to keep the money. How much money is that? Wow, $465 if it trades below. And of course, anytime it goes above $72.74 right here, you have a winner in your hands. This is the win area, and this is your loss area. And you can take profit anywhere along here. So if it goes to 80 or even 77, this is your win line. So I'm thinking that $100 is reasonable in 2 or 3 months on a $1,000 or $1,100, and that's about 10%. So which equates to about 2 to 3% on your money. And if you can do that 2 or 3 times a year, that's 7, 8, 9, 10% on your money on $1,000. How did I figure that? $100 divided, or $1,000 divided into $100 is about 10%, 11%. Just rough. You don't have to be exactly accurate, and that's decent money. So let's look at this thing at our chart again. Before I leave, it's a poor man's covered call, selling an 80 for money and buying a call at 65 to protect your money. And the difference between here and here is going to be your max loss. And the secret is you're selling the short call in June, which is before your long call expires. 72.74 is our break even. Let's check this out. 74, let's make it 75. That's our break even, about where it's at today. I think it's going to get up to the 80, but we're going to take profit somewhere in between here. And we hope to make $100 or a little more. And the reason why I think my wife's going to like a poor man's covered call is she's a basic buy and hold type person. She doesn't want to do a lot of day trading. She just wants to watch her stocks and her money grow. She's, in a past life, she was a doctor, and she stashed her money into the bank accounts, bought gold, bought jewelry, and she wants to watch her money grow now and keep it. This is not a get-rich-quick strategy. So I'd like to conclude by asking, do you think this stock is going up based on the RSI, the MACD going up? Do you think that Uber is a good company for the future through their diversification, their recent profitability situation, their interest in autonomous vehicles and flights, the fact that the free cash flow model is showing that this stock is very much undervalued, and the fact that you think this stock has a very good upside potential. If you do that, this might be the stock for you, and this is the one I'm recommending for my wife to start out with her first poor man's covered call. Uber Technology. What do you think? How about leaving a comment below and whether you do poor man's covered calls, whether you think this stock is going up. And if, by the way, you can certainly sell a put on this if you have money. It's not an expensive stock. But currently, my wife only has a level 3 account, which requires her to have cash secured puts. She doesn't have a lot of money for that. And remember, you must do your own due diligence. And this is why I'm starting my wife out slow too. She needs to understand what she's doing and not do too many of these until she understands exactly what's going on. So do your own due diligence, learn it, and win for life. Happy trading. We'll catch you on the flip. Don't forget to like and subscribe. We need your help. Thank you.